If you've ever thought that the stock market was the only way to grow your money, you're wrong. Think again. In this video, I will burst your bubbles and reveal 7 best places to invest and earn insane returns that is not the stock market. The best part? These alternatives are not only more stable, but can also bring in passive income and long-term wealth. The last on the list is capable of skyrocketing your investment to a 10x gain. Let's dive in. What if I told you that you could play the role of a bank and earn money by lending out cash? Welcome to the world of peer-to-peer or P2P lending. There's a peer-to-peer lending platform like Lending Club, a financial services company headquartered in San Francisco, California. They offer consumer and commercial loan products for every credit bracket and a full suite of deposit products designed to help you keep more of the money you earn and earn more on what you keep. Then there's Funding Circle, which allows citizens in the UK, Germany, Netherlands, and the United States to lend money directly to individuals or small businesses. In return, earns monthly payments with interest. How does it work? You deposit your money into the platform, which gets distributed as loans to borrowers. Each borrower repays the loan over time, plus interest, which lands right into your account. What's the return? P2P lending offers annual returns of 5 to 10%, higher than most savings accounts or government bonds. Diversifying your loans across multiple borrowers helps reduce the risk of defaults. Real-life example. Let's say you lend $500 to 10 different borrowers. Even if 1 or 2 default, the returns from the rest can still keep your portfolio profitable. P2P lending can be an exciting way to diversify, but if you want something more tangible, let's move on to our second option. Precious metals have stood the test of time as a reliable way to store and skyrocket wealth. When markets crash, people flock to assets like gold and silver to preserve their buying power. But why precious metals? Hedges against inflation. Paper currencies lose value over time, just as the US dollar is losing its value because of the introduction of the BRICS currency. But metals like gold retain their worth. Safe haven during crisis. In times of uncertainty, such as during a financial crisis, gold prices typically soar. Investment options. Physical gold and silver. You can buy coins, bars, or jewelry and store them in a secure vault or home safe. But if your goal is to invest in gold as a hedge against the rest of your portfolio or as a tactical investment, then gold ETFs may be a wise choice. This allows you to invest in gold without physically owning it. They're easy to buy and sell on the open market. But if that's not your thing, you can choose to invest in rare metals like platinum and palladium. While less popular, these metals are used in high-tech industries and have long-term growth potential. Did you know the price of gold surged over 200% from the beginning of 2022 to 2024, making a new all-time high, and has proved its value as a safe haven asset? Also in 2008, during the financial crash, the stock market lost nearly 50%, but gold surged by 25%. In fact, many investors shift their money to gold whenever the economy looks unstable. But if precious metals seem a bit too old school, don't worry. Let's talk about something much more hands-on and exciting. Real estate. It's often called a wealth builder because people have been using it to secure financial freedom for centuries. Now the good news, you don't need millions to get started in real estate. Here are 2 easiest ways you can invest. Number 1, rental properties, monthly cash flow. Buying a rental property lets you earn monthly rent, while the property's value appreciates over time. Even a small down payment today could result in a solid rental income for years to come. Example, let's say you buy a duplex. You live in one unit and rent out the other. This is called house hacking. Not only do you live rent-free, but the rental income can help pay off the mortgage. Tip: start small, maybe with a single-family home, and reinvest your profits into more properties. Number 2, vacation rentals and Airbnb. Short-term rentals can generate higher returns compared to traditional leases. Ideal for areas with heavy tourism or business travel, think about a cozy beach house or city apartment listed on Airbnb. Some Airbnb hosts make over $10,000 a month renting out spare rooms or second properties. A couple bought a small cabin near a national park for $120,000 and listed it on Airbnb. Within their first year, they earned $30,000 in rental income. But if managing tenants isn't your thing, you can invest in real estate investment trusts. These are companies that own income-generating real estate, and you earn dividends just by holding shares in them without ever lifting a hammer. Did you know real estate investment trusts have historically returned 8 to 12% annually, outperforming many traditional stock investments? That sounds incredible, right? Yes, it's possible to earn life-changing money from real estate investment. But if real estate isn't your thing, don't worry, I've got an easier option that can make you money even while you sleep. Everyone knows Bitcoin, but the crypto universe offers other ways to grow wealth. Ethereum is more than just a cryptocurrency. It enables smart contracts and decentralized applications, opening the door to a new financial system. As more projects use Ethereum, its value could skyrocket. Shiba Inu, a coin launched on the Ethereum chain, skyrocketed to 1,000 times in return in 2021, causing Ethereum to soar as thousands of people were buying Ethereum to swap for Shiba Inu. Also, stablecoins like USDC or Tether provide the benefits of crypto without the volatility, pegged to the dollar. They can be used for trading or as a store of value. Staking for passive income. Many cryptocurrencies allow you to stake your coins, meaning you can earn rewards by participating in the network's operations, like validating transactions. How it works? By looking up your crypto in a staking wallet, you help secure the network and earn rewards in the form of additional coins. Returns. Depending on the coin, staking can yield returns between 5 to 20% annually. Suppose you stake 2 Ethereum or approximately $6,000 at current prices. If your staking platform offers a 7% annual yield, you could earn $420 a year in passive income while also benefiting from the price appreciation of Ethereum. Why invest in cryptocurrencies? Cryptocurrencies can experience explosive growth, leading to significant profits for early investors. As the world becomes more digital, cryptocurrencies and blockchain technology are at the forefront of this transformation. Me and other thousands of investors have made huge returns from investing in crypto. It is quite risky, but have a good management plan and go watch the video above where I explain everything you need to skyrocket your investment in crypto. Let's continue. The volatility of crypto scares a lot of people away. But if crypto investment is not something you'd love to put your money into, I've got something you can put your money into without having to worry about crypto volatility. Continue watching. Private equity and venture capital. Investing in early-stage companies can deliver extraordinary returns if you find the right one. With platforms like AngelList, you can back startups or venture funds with as little as $1,000. Why consider private equity and venture capital? Early investors in successful companies can see returns of 10 times or more on their investments. Investing in startups allows you to support innovative ideas and be part of the entrepreneurial journey. In 2012, angel investors who put $50,000 into Uber saw their investment grow 100 times when the company went public in 2019. Investors in early-stage tech companies such as Airbnb and Dropbox also experienced similar windfalls. But remember, many startups fail, and you should be prepared for the risk of losing your investment if you choose the wrong startup. Not into high-risk startups? Don't worry. Coming up next is a tangible liquid asset you love. Acorns, micro-investing made easy. Acorns simplifies investing by rounding up your everyday purchases to the nearest dollar and automatically investing the spare change into diversified portfolios. Users can choose from various investment strategies tailored to their financial goals and risk tolerance. The app also offers features like automatic rebalancing, educational content, and retirement account options. With Acorns, even small amounts can contribute to long-term savings, making it accessible for new investors who want to grow their wealth without the complexities of the stock market. Benefits of Acorns. Ease of use. Acorns automates investing, making it accessible for beginners. Micro-investing. The roundup feature allows you to invest small amounts effortlessly, accumulating over time. It offers diversified portfolios based on your risk tolerance managed by professionals. Users can access financial education materials to enhance their knowledge. Acorns also provides accounts for retirement savings, helping users plan for the future. As a busy individual who does not have time to invest in any of the above listed options, you can download Acorns after doing a proper research, then link your debit card, and the app will start rounding up your purchases. For example, if you buy a coffee for $3.50, Acorns rounds up to $4, investing the extra 50 cents. Over 6 months, these small contributions accumulate to $300. With Acorns educational resources, you can learn about investing and feel empowered. But before you start using Acorns, do your own research. Acorns may not give you your desired return on investment, unlike Bitcoin and real estate, but if you prefer a traditional method of making money and skyrocketing your investment, wine and whiskey investments is your best option. Did you know that some rare whiskey surged over 500%? Platforms like VinoVest allow you to invest in wine and whiskey portfolios without storing the bottles yourself. Why invest in wine and whiskey? Fine wines and whiskeys have historical and cultural significance, often increasing in value over time. These assets often maintain or increase value during economic downturns. Investment options. Direct purchase of bottles. Invest in high-quality bottles from reputable sources. Wine and whiskey funds. Invest in a fund that manages the acquisition and storage of multiple bottles, providing diversification. In 2020, a rare mezcal and whiskey bottle sold at auction for $1.9 million, highlighting how high-end spirits can be lucrative investments. Similarly, fine wines have shown an annualized return of 8 to 10% over the past decade. Next up, we're looking forward to the future of energy. Keep watching and you'll discover how green energy investments can grow your wealth while helping the planet. The shift to renewable energy offers new ways to invest. You can buy solar ETFs or invest in wind farms through green energy bonds. Why invest in green energy? The demand for renewable energy is projected to grow significantly as countries move towards sustainability. Many governments offer tax incentives and subsidies for renewable energy investments, making it a favorable environment for investors. Investment options. Green ETFs. Funds that focus on companies in the renewable energy sector, such as solar, wind, or hydrogen. Direct investments. Invest in specific projects like solar farms or community wind projects. In 2010, investors in solar energy stocks saw their investments multiply as solar technology became more affordable and widely adopted. For instance, First Solar stock increased from $5 to $100 over a decade. Finally, let's talk about Farmland, a stable long-term investment that might be just what your portfolio needs. Farmland provides steady income through crop sales and land appreciation. Platforms like AcreTrader let you invest in farmland without the hassle of ownership. Why invest in farmland? Farmland has historically returned around 10% annually, combining income from crops and land appreciation. Inflation hedge. Agricultural land typically appreciates over time, making it a reliable investment during inflationary periods. Investment options. Direct ownership. Buy and operate a farm, which can be labor-intensive but rewarding. Farmland REITs. Invest in real estate investment trusts focused on agricultural land. Crowdfunding platforms. Invest in farmland through platforms that allow you to pool resources with other investors. According to the National Council of Real Estate Investment Fiduciaries, farmland investments have consistently outperformed both stocks and bonds over the long term. Investors who bought farmland in the 2000s have seen values double or triple in many regions due to rising demand for food production. Why a lot of people prefer farmland? It appreciates over time, offering a stable investment with potential income through leasing and farming activities. Investing in farmland allows for risk mitigation by diversifying your investment across properties, crops, and markets, providing steady returns. With the right approach and a well-balanced risk management, you can even skyrocket your investment up to 20 times. Happy investing and see you in the next video.